So if you're an investor in the Nigerian stock market or even the bond market, you want to pay attention to the price of crude oil. It is no secret that in Nigeria, everything rises and falls on the price of crude oil, including the capital market. Speaking of the capital market, at a time that most companies in Nigeria are crumbling under harsh operating environment and operational expenses, GT Bank became the first Nigerian bank to post a profit before tax of 1 trillion naira. This is coming on the heels of another spectacular performance by another bank that we track, Stanbic IBTC. How are these banks doing it? We are obviously in the most important week in the global capital market. We are on the cusp of the first rate cut by the US Federal Reserve. Is the Fed going to cut rate by 0.25% or by 0.5%, as expected by many analysts? These and many more on the 8th edition of Market Tape. Welcome to another episode of Market Tape. This show brings you the most important scoop, insight, and analysis from the Nigerian and global capital markets. Do not hesitate to subscribe and hit the notification button so that you never get to miss any of my shows. About a week ago, the price of crude, that is Brent Crude, touched $65.75. This is the lowest we've seen in a very long time. In the last 2 years, oil price has remained relatively above $70, even reaching over $100 at some point. Now, oil price crashing down to $65.75 kind of highlights the volatility of the oil market. As we know, oil is a very volatile commodity because it's always impacted by natural disasters, geopolitics, and a lot of factors that one can't really predict. So, as we know, Nigeria is a country that basically lives on crude oil. Everything in Nigeria revolves around crude. And this includes even the stock market. The stock market basically has a high level of correlation with oil price. And I'm going to give you facts and figures to drive home this point as we go along this show today. Brent Crude reaching $65.75 was like, it spooked the market last week, really. And it later recovered above, back to $70 per barrel this week. Currently, oil is trading at over $72 per barrel. For me, this is a reminder to the uncertainty, particularly around the capital market in Nigeria, and being that everything in Nigeria revolves around crude. So you would expect that as an investor, you want to put your ears down, particularly at a time where we are starting to see lower demand from China. China is one of the most important countries in terms of demand for crude oil. And if growth is slowing down in China, as we are seeing it today, then it becomes a source of worry for investors, and particularly for a country that largely depends on crude like Nigeria. China has a population of about 1.4 billion people. Same with India. So these two countries, China and India, combined have a global population of about over 2.8 billion people. And so they are very important buyers in the crude oil market. So you want to pay attention to what is going on in these two countries, China and India. China particularly has seen slower economic growth in the last few quarters. Demand has gone down in China, and so it's impacting demand for oil. And OPEC itself has also factored this into their expectations for demand for 2025. So because of that, we've seen oil price kind of moderate in the last couple of weeks, dropping to 65.75 last week before recovering. But it's a reminder for people who are invested in the Nigerian capital market that oil plays a very important role in terms of investment outlook going forward. And why do I say this? Oil accounts for about over 70% of revenue, government revenue. Oil accounts for 70% of that. Same with export. Oil accounts for about 90% of foreign exchange earnings that comes into the country. And so it's important. We saw the foreign trade data from the Nigeria Bureau of Statistics last week. That data came out at a trade surplus of 6.9 billion naira, which many people jumped on and celebrated. It's always refreshing to see a positive number like this come out for at a time that we are going through all sorts of economic uncertainties. Seeing a trade surplus of 6.9 billion can be, I don't know if I'd say a cheering news, but if you dive deep into this number, you see that it's the same old story. Oil still accounts for about 90% of this number. Crude accounts for 74.98% of the total exports as at second quarter of 2024. Oil products accounted for 15.01%. So combined, crude and oil products accounted for 90% of total export as at second quarter of 2024. In terms of non-oil product, we saw just 10% from non-oil products. So while you can look at this number and be excited about it, I think the excited needs to be moderated because what matters, we've always spoken about how much we need to diversify the economy away from oil. The non-oil sector is relatively stagnant, not growing. It's still about 10% of the total export for last quarter. And then you look at the increase. Where are we seeing this increase coming from? Basically, you saw about 201% increase in exports relative to 97% increase in imports. But the factor particularly driving this is exchange rate. You're coming from 2023 where exchange rate official rate was about just over 400 naira per dollar. And then today it's almost 1,600 per dollars. So if you look at that, you see that the export base is really not growing because we are producing more. We're seeing this number simply because you are starting to see revaluation of these exports based on the current exchange rate. Not too exciting, but I guess seeing a positive balance of trade is always better than seeing a negative. Yeah, but it's what it is. So this kind of drives home the point that the country is still largely dependent on oil revenue. We haven't seen that level of diversification away from crude oil that we expect into other sectors like agric, which agric actually grew by 246% from second quarter of 2023. But one sector that saw massive growth was oil products export. Non-crude related. I think we are beginning to see the impact of the Dangote refinery here because currently he exports diesel, aviation fuel, and hopefully he will start to export excess petrol that we don't consume in the country. And this should boost our exports going forward. I think it's where I am most excited about the non-oil products growing even more than this in the rest of 2024. We saw a growth from, 740 billion naira in Q2 2023 to 1.9 trillion in Q1 2024. and currently is at 2.9 trillion as at the end of Q2 2024. So I'm really excited about the prospects for oil products, refined oil product exports coming from the Dangote refinery. But back to the subject matter, oil price has a profound impact on the Nigerian stock market. Obviously, there are companies listed on the exchange that will be impacted by oil directly or indirectly. Now, for those companies that will be impacted directly, obviously the oil and gas sector stocks will be impacted directly by any change in crude oil price. If it's a negative, if it's a downward movement in price, you expect that those stocks will go out of favor in the market and lose share price. And then also the banking and insurance sector that finance and underwrite the oil sector will also be impacted in some way. But indirectly, you're going to see weaker demands for manufacturing and industrial goods, consumer goods. You're going to start to see weaker demands because, as I did say, oil accounts for 70% of government revenue. And with oil playing such a prominent role in terms of how much government is able to spend in terms of salary, in terms of infrastructures, you see that impact percolate to these sectors: manufacturing, construction, consumer goods, and obviously industrial goods. So this will this is where you see indirect impact for oil. Now, if you look at between 2008 and today, we have had 7 years that the stock market had a negative return. 7 years between 2008 to today. Of those 7 years, 6 out of them had lower crude oil prices relative to the previous years. Starting with 2009, the stock market lost 49.49%. If you remember 2007, 2008, we had the global economic crisis. And as at 2008, the story in the media, in the financial media in Nigeria, was that Nigeria was sort of insulated from what was happening globally because our GDP was growing at a very rapid pace at that point in time. Everything was going on well. So we had the financial crisis from ending of 2007 to 2008. Nigeria did not feel the impact until 2009. And part of why we started to feel the impact was oil price dropping from about $100 per barrel to 61.51, average of 61.51 in 2009. And the stock market felt the impact. The stock market lost 49.49% in 2009. In 2010, oil price improved slightly to 79.47, but not back to the level we saw in 2008 and the years before that. The stock market also lost in 2010 15.50%. Then in 2012, that is the only year that we had both a high average price of crude oil, and then the stock market also lost, obviously because of other factors. In 2012, we saw the stock market dropping by 10.08%, and Brent crude price at $111.63 per barrel. That is the only outlier in this equation. In 2015, oil price dropped again to $52.32 per barrel. The stock market lost 21.27%. In 2016, we saw oil price even drop further to 43.67, and the stock market also lost 15.34 same year. In 2019, apparently after 2016, we saw a rebound in oil price between 2016 and 2017, but it dropped again in 2019 to $64.3 per barrel, and we saw a loss of 22.22% in the stock market. Then obviously COVID happened in 2020. Oil price went down to 41.96, about the lowest we saw. And then the stock market lost aggregate 7.11%. So in the last couple of years, between 2008 and today, the stock market has closed negative 7 years, negative 2009, 10, 12, 15, 16, 19, 20. And of those years, 6 of those years, we saw a lower oil price compared to the previous years. So it's not a coincidence that every time oil price crashed, we saw the stock market also give up some of the gains from prior years. So as an investor in the stock market, you want to keep an eye on what is going on with the price of crude oil in the market. Again, oil is something that is very difficult to forecast in terms of setting expectations. Today, as I said earlier on, we're seeing lower demand from China. OPEC is delaying increasing output for, I think, 2 months. We expect them to come up with a decision around December this year. So the outlook for oil currently is gloomy, but if you understand oil, the way crude oil price works, things can quickly change the next minute. Geopolitics can happen, and then suddenly prices will start to go up again. And then, of course, with all the fears around recession, particularly the big economies, Europe, America, we're expecting a Fed decision this week on the 19th. That will tell us what the Fed's thinking is and where the U.S. economy is. Obviously, U.S. is one of the most important economies globally. So we want to see if the U.S. is able to avoid a recession. It's important for the price of oil, because if the U.S. slips into a recession, it's going to hurt demand. We're going to probably have oversupply, which is the expectation currently going forward. There's a lot of expectation for oversupply of crude oil prices. So, but that can easily change overnight. So if you are invested in the stock market, particularly in the Nigerian stock market, you want to make sure that you are factoring in this volatility, because it explains again why the Nigerian stock market is very, very volatile. And so how do you hedge yourself? How do you protect yourself against this? By ensuring that your portfolio is adequately diversified across sectors. You don't want to be concentrated, whether it's the banking stocks, which is the rave of the moment currently. We've seen the spectacular performance by GTB, and we have all of these public offers in the market, and more will still come. So you want to ensure that as you are buying into these offers, you are ensuring that you are diversified across sectors, consumer goods, banking, maybe even the oil and gas, which again is very volatile, investing in oil and gas stocks. You also want to be diversified across asset classes. You don't want to have all your portfolios invested in the stock market. You want to make sure that you have some of these funds in the fixed income market, which is actually doing well today. So for anyone investing in the Nigerian market, I think the barest minimum you can do is to have a 60-40 portfolio. That is 60% in the equities market and then 40% in the fixed income market. So a note of warning, this is not an investment advice. I'm not asking you to go do that, but I'm saying it's better to do this than have 100% position in a single asset class, to be excessively concentrated. So the proportion you allocate to each asset class depends on your risk ability, your risk tolerance, your investment goals. These are things that you can discuss with an investment advisor and get proper guidance. But just generally speaking, having a diversified portfolio at this point is very, very important, diversified across asset classes. And also for people who can afford it, diversification across markets. You don't have to, that is if you can afford it, you don't have to be concentrated in the Nigerian market alone. You may want to get exposure to other markets. I mean, the S&P 500, which is the proxy for the US market, is one of the most invested markets globally. So you may want to diversify across those asset classes. And then to Guaranty Trust Bank, the bank posted a massive report last week. The first bank to post a 1 trillion naira profit before tax number. And this represents a 206% growth from 2023, Q2 2023. So in Q2 2023, they made 327 billion profit before tax. So, and this year they are dropping 1 trillion. How did I do this? For me, the magic number here is 10.5 trillion in customers' deposit. That is massive. GTB grew customers deposit from customers and other banks from 6.32 trillion in June 2023 to 10.50 trillion as of June 2024. That is a massive 66% growth. So it's simple what these banks have done. There's no magic here. So what they have done is simply take these deposits from their customers, me and you, everyone who has money in the bank. The total GTB has currently is 10.5 trillion in customers' deposit. And GTB is not even the bank with the highest customer deposit. And we're yet to see reports from the likes of Access Bank, UBA, First Bank. But Zenith Bank that reported, I think towards the end of August, posted in their report, customer deposit came at over 19 trillion. So these banks are sitting on a pile of cash, not their own money, depositors' money. And it's what they are doing with this money that is making the clear difference for them. GTB particularly have positioned themselves years ago for this time. You know, their approach to critical mass segment was unique in the sense that GTB was about the first bank to embrace marketing university students. Students generally, they were all out years ago in bringing a lot of students into their books as customers. Today, many of those students are business leaders, they are CEOs, they are executives. Many of these guys are earning a lot of money today, and this is what is showing up on their balance sheet. So they have a total deposit of 10.5 trillion, 10.2 from customers, and just about 250 something billion naira from other banks. So what they did with this money is deploy it in terms of creating loans and investing in financial assets. Yeah, so this is how they deploy this money. So if you look at their interest income grew by 183% from 214 billion to 607 billion, and bringing their total profit before tax to 1 billion. They also had another over 600 billion that was classified as other incomes. What are these other incomes? Largely unearned income from revaluation of financial assets. So as I did say earlier on, a lot of these 10 trillion was invested in financial assets. And over time, these financial assets have appreciated in value, bringing that appreciation to over 600 billion. So this is the magic that GTB has done just in the first 6 months of 2024. You expect to see a stronger performance from the bank as they close the remaining part of 2024. One other thing I would say about GTB is their efficiency. GTB is about the most efficient bank in Nigeria. As I did say, they are not even the bank with the highest customer deposit, but they are very efficient how they deploy their assets. They are very, very efficient. If you look at operational expenses grew by 55%. Your interest income is growing by 183%, but your expenses is growing at a much more lower rate, at just 55%, which is why they're able to come up with this monster performance that we've seen. The GTB has about the best ROE in the industry. They have about the best return on asset and return on equity in the industry, and it's coming from the operational efficiency. Operational efficiency in terms of achieving more with less is what GTB's business model is basically about, and it shows up on their financial ratios like return on assets and return on equity. Now, but as I did say, a lot of this 1 trillion we are seeing is not earned yet. It's not earned. They are coming from unearned revenue. Okay, and to break down the 630 billion naira coming from other income, we had a massive 493 billion coming from unrealized fair value gain on financial instruments. So from the financial instruments that they invested in, they had capital gains that has not been realized up to the tune of 493 billion. And then unrealized gain on forward transaction, these are derivative instruments, 130 billion. Those are the most significant aspects of this other income reported by the bank. Within the last 1 year, GTB stock price has appreciated by about 30%, but not much of this performance has reflected in their stock price recently. Obviously, they were in the market to raise capital just very recently. So I don't think the buy side for the banks is strong, particularly in the secondary market. Another bank that posted an impressive performance recently is Stanbic IBTC. Stanbic improved their net interest income by 123% from 110 billion in 2023 to 246 billion currently. Profit before tax also went up by 71%. Earnings per share 8.84 naira. GTB obviously has a better earnings per share. Their earnings per share came at 32 naira. Okay, for the US market, it's a very, very important week for the US market. Last week we saw the US inflation number come at 2.5%, better than 2.6 expected. And so it's almost guaranteed that we're going to see a rate cut. But the question is, by how much are we going to see a rate cut? And I mean, the Fed chairman had said consistently that they'll cut, their decision to cut rates would depend on the sort of impression they get from the economic data that they see leading to that decision. We've seen unemployment rate at 4.2%. We've seen inflation come down to 2.5%. So it's going to be a balancing act for them, trying to balance between how much rate cuts should they apply at this point to get the economy moving, to keep the economy stronger and avoid a recession, while inflation continues to moderate. But in terms of the long-term outlook, I actually don't see a massive deceleration in interest rates in the next few months. You know, obviously the Fed has a long way to cut. Currently, the federal fund rate is around 5.5%. You know, and then this came all the way from near zero to 5.5% today. So obviously they have a long way to go, even if they decide to start cutting at 50 basis points. You know, you need about 7 rate cuts to get you back to the 3% level. And I mean, 7 rate cuts will be well into 2025. So we are likely to still see a relatively high interest rate environment for the next couple of months. But it's the decision week, and we will see what happens. Already, the market is bracing up for a rate cut. The S&P 500 last week returned 4.02%. better than the performance the previous week. Then the tech heavy Nasdaq returned 5.95%. Now, to the drivers of this massive rebound in the market last week, typically is the technology stocks again that we are seeing drive this rebound. Speaking of Broadcom, Nvidia, Oracle, Arista Network, Supermicro Computers, all turned in positive performances, particularly Broadcom. Broadcom went up by 19.08%. But I'm going to circle in on Oracle. Oracle is the guy that returned 15.83% last week, and is coming from impressive first quarter 2025 reports that saw their cloud revenue jump by 21% to 5.6 billion, which was better than expected. Oracle has been in the news lately, again for artificial intelligence. Their data center, which boasts of one of the best securities and, of course, lower costs. Oracle has been in the data center business for a while, data center and networking business, obviously, for a very long time. And I think that experience is paying off at this time. So their data center is in demand. It's an automated data center manned by robots. So, and that is driving their performance lately. Recently, they entered into a partnership with Amazon, to integrate their data center with Amazon's cloud technology, that is AWS, Amazon Web Services. And this partnership and the impressive results we saw has been driving Oracle to high heavens recently. Currently, their year-to-date performance is 55.21%, which is far better than the 19.13% posted by the rest of the market. So Oracle is one stock that I want to keep an eye on personally. I don't have this stock. I don't have a plan of buying it immediately, but this performance to me warrants keeping an eye on. Obviously for me, I'm kind of overweight with technology stocks, so I'm not in a haste to add a new name. Especially, I have to be very, very convinced about what they are doing. But like I said, it's a company that you want to keep an eye on going forward. And back to the Nigerian market, we saw a better performance last week from the All Share Index. It improved by 1.06%. Owando continues to perform 9.4 for last week. In fact, I basically have lost track of what their performance in the last 1 year is. I guess maybe something over 800%, going to 900% in the last 1 year. Is this justified? I don't know. But you also have MTN rebounding a bit. MTN has been losing market capitalization lately. They rebounded last week by 7.37%. Maybe one of these days I'll get to drill down on MTN and look at the numbers very critically. Nestle also performed well last week, returning 9.8%, and then Flour Mills 22.47%. Now, on the fixed income side, the Treasury bill auction held last week, and the 1 year Treasury bill closed at 18.59%, which is lower than the 18.9 the previous week. So obviously, the debt management office is signaling that I think they believe that the US Fed will cut rate, and they're already bracing for lower rates in Nigeria. But on the fixed income side, last week started out kind of bullish for both the Treasury bill and the bond market. We saw rates come down in both markets. That was before the Treasury bill auction result was announced. at the end of the auction, we saw the 1 year rate come down slightly from what now? 15.8, about 15.9, 18.9 actually, from 18.9 to 18.59%, just a slight reduction. To me, is the DMO signaling that they want to systematically continue to push for a lower interest rate. Of course, that is what they have to do to reduce debt servicing expense on the government. We also saw the local bond, the local dollar bond. The report came out last week and it was oversubscribed massively. The government was able to raise about $900 million. On the bond side, the market traded basically sideways throughout last week. Started out bullish, and then rates went up slightly again as we went towards the end of the week. I think the most important decision overall is what the Fed does today, by how much are they going to cut rate, and we'll start to see how that impacts other markets globally. And this brings us to the end of this episode of Market Tip. Make sure you subscribe and you hit the notification button because you don't want to miss any of my shows. Thank you. Till next week.